Hey guys, I just wanted to do a quick review after the sell-off we seen uh, on Friday, and this weekly candle ended with the bearish engulfing. Quickly reviewing SPY and go over a few other of the major indicators. You can see VIX was up 21% on Friday, and you can see the weekly candle, huge bullish engulfing candle for the last month or so on the VIX. So we could potentially see a higher move leading into next week, but I personally think this will sell off back to 16. This is a pretty strong wick with the body aiming downward. RSI exploded. From a strength perspective, I do think we need to go test 50 before going higher if we do. But looking at SPY mainly, RSI already dumped below 50. We gapped down really hard. We, however, have not touched any of the EMAs. They started to curl. We haven't touched the 21. It's possible that we do. If I were to move this up, let's just drop that. Yep. So we did get below the 21 EMA. We did find support in June on the EMA. So now we've just retested that. I do think overall we're still strong. We're holding the Iran war news volume weighted average price. So if we anchor that to there, I think we're okay. And if we just draw some support, I think in the short term we do have a little bit of support here, possibly. So maybe some chop in the following weeks or so. Um, Best case scenario, we're cautious going forward. Don't want to be overextending, but I think 610 could absolutely get retested, and then maybe the 600 gap if we are not able to fill this gap of up here first. So potentially lower, but possibly a bounce in the short term. Most of the other charts also look very similar to this. But you can see we did on the volume range profile, we did go to a lower volume area. There was massive volume in this 580 to 600 range. There was more in the 640s and the 620s. So now we did creep right into the 618s about 3 times so far, and I believe there's accumulation happening there. We will see how these candles reverse. Also, you can see my script. Any of the black triangles above the candles are new 200-day highs. So you can see we recovered so fast from the April dip that we saw a bunch of 50-day highs over here in the white candle or the white triangles, and then the black triangles are 200-day highs, and we just keep printing new highs. So this is in my opinion, a healthy pullback in a bull market, and we will see continued expansion hopefully after this. But like I said, potential to chop. I think QQQ could have some additional downside, maybe retest these highs if we are not able to, like I said, fill the gap that we made on Friday. We will see. I do think it is time to be cautious, but not bearish. Definitely need some chop. The dollar did reject the 100 level all the way almost 1.5% down and found most likely new support on the 98. If it breaks lower, we're going sub 97. That will be risk on for assets. That will definitely choose equities. Looking at IWM, I do think we found some support resistance support, and now it's either a fake out or a breakdown, right? So I think this is more likely to be a fake out, and we rip higher because of this candle. It seems to be bouncing off that wick relatively strong. We zoom into the 65-minute chart, huge wick here of accumulation. Tried to get it lower, and we tweezered green, engulfed both of those, and now we're trading within that. So maybe it drops a little bit lower and then rips higher. We will see. Definitely think the selling, there's a little extreme selling, but time will tell. We do not know what's going to happen. We simply have to react to the price action that occurs. Looking at TLT, we saw a rip in bonds, possibly going to be oversold here, but I do think you get probably to the 88s again, maybe even the 90s, and then it'll reverse. I'm not going to play this in any way, but something to keep on the watch list. Gold did gap up, and it could potentially go retest the 318s, 320s. I think the all-time high was 318 something. So it's possible that's in the cards for gold. UNG, nothing really to write home about, and oil trading in a range as it has been consistently. They're going to keep this thing probably sub $85, maybe sub 90 for the next coming years. I don't see it dropping below 60, and I don't see it breaking above 90. And then the 10-year did dump about 3.7%, rejected the fives from 23, doesn't seem to be making any new highs. Could most likely go lower in the short term, but I think we are going to be range bound in the 10-year. Looking at healthcare, it did dump quite a bit. What else did I want to look at? Yeah, this is a zoomed in view of SPY. The top three charts are 15-minute, 65-minute, and a daily, and it's just zooming in on that gap that I believe we need to fill in potential support in the short term, maybe providing a bounce. We go up here and then we reject. That's what I think will happen. Position that way at least, and we'll see if I'm correct. If not, I will manage risk accordingly. That is all I have for today. Just wanted to hop on here and say, something to be cautious about. Market is showing potential signs of weakness, but I don't think it will be long term bearish. We will see though. Like I said, we need to react to price. This is a weekly bearish engulfing. It's not a bullish candle at all, but it does provide potential pullback, which then will fuel the fire for longer. If we want something like this over here to occur, sell-offs have to happen for more buyers to step in. Not everyone is going to buy continuous 52-week highs. So, 50-day highs, break down, 100-day highs, 200-day highs. You run, break down, do it again. We'll see what comes out of it. But that's all. Thanks, guys.